Hi, this is Jeffrey Cohen, Chicago Quantum. I'm going to talk to you today about a lot of topics. This is our weekly update. It's week 7. So let's begin. The market this week was rocky. We had the cold weather. We had power problems. Tuesday night futures were weak. And Wednesday the market started lower. And I got to tell you, everyone that I follow, all the financial people on Twitter, the fintwits, were calling a top. And Thursday was definitely a down day. Thursday night was down, futures were down, Nikkei was down. I didn't sleep much last night. I was worried. But Friday opened stronger and closed mixed. Smaller stocks outperformed. The Russell 2000 was up. I'm going to show you, but I want to say it was 1.5%, 2% on the day, and that did better than the larger indices, the NASDAQ Composite 100 and S&P 500, which are larger companies. Those were down today. So let's talk a little bit. Let's take a look at the market and see how we did. So GSPC is the S&P 500, and for the week, flat, a little lower, choppy. NASDAQ for the week, definitely lower on the week, down a couple hundred points, and yeah, struggled. You can see Thursday, Wednesday evening into Thursday was down quite a bit. The Russell, this was my surprise. The Russell's up pretty aggressively this week, up over 1%, and so small caps definitely did better. If we take a look at the S&P 500 for the week, we see that energy is green, which is nice because I'm in energy. We see consumer cyclicals are green. We see some travel services green, but we see a lot of red. Tesla is down almost 4%, under 800. Walmart took a terrible beating after their earnings. Facebook down, Apple down. I'd heard Apple's down for the whole year. And Disney, Netflix, a lot of the names that you know, the credit card companies are down, but the banks are up. And so pretty mixed for the week. Interesting that I'm guessing with the changes in interest rates, you're seeing the banks do well, but the credit cards maybe not as well. Let's take a look globally and see if the picture's different. This is for the week globally, and you see there's some nice green in there. So it's mixed, but the United States was a little tricky, and the rest of the world pretty strong. All right, let's talk about bonds. So long U.S. government bonds, 10-year, the yields continued to climb. I'm going to show you that as well. But when the yield goes up, you feel great because you're getting more interest. The problem is that most of us, we hold these bonds in our 401ks and our investment accounts. And so as the yields climb, the bonds themselves become a lot less valuable, and you lose money for your retirement. And so I just want to talk about that because there's a whole lot of chit-chat about bonds and what that's going to mean. And I actually want to spend a moment and talk about it. So what happens with the long bond is it's a symbol, it's a fighter of inflation, right? So we'll take a look for the week. We're going to look at it hour by hour for the week, and you see that the yields started off. Look at this into December. December, you're down under 1% for 10-year money. Climbed up to almost 1.2 early mid-January. Hit the same point mid-February, February 8th. And then you see, wow, we're at 1.34%. So this is a dramatic increase. This is 30-40% higher yields. And so it either means, A, we're going to see more longer-term inflation, which makes sense. Last week we talked about the Federal Reserve Bank saying that 2% inflation was an average target, not an absolute target. And also that longer-term investments, capital investments, are probably going to make money. So if you want to build a factory, you want to buy capital equipment, you want to build a pipeline, there's probably good money in it, as opposed to just giving your money to the government for 10 years. And so I look at this as a good sign, but also a tricky sign because now money's a little more expensive. You're going to demand more yield for 10 years, and that's going to drive investment. That's actually a byproduct of investment. Close that up. Bitcoin. Bitcoin is amazingly expensive now. It's up over $50,000 a coin. I had read that if you added up the price of all the Bitcoins, the valuation is $1 trillion. This is unprecedented. It is having an impact on the markets. It is drawing capital. I can't really tell you what the impact is. I'm very curious. I think we're all curious to see. Just to show you the Bitcoin, again, I'm going to blow this up for you. This is Bitcoin to US dollar. I'm going to show you over the year. Earlier this year, you could have bought it easily for 8, 9, 10 grand. Even as low as maybe 6 grand. And then it just skyrocketed into 2021, 30,000, 40,000, 50,000, 55,700. It's crazy. Bitcoin is it's quite a bubble. And so we don't get involved with it. There's compliance issues with our firm, but I just thought it's good for you to know that. And it's not just Bitcoin. This is the crypto index. The crypto index over the year has the same type of curve. So it's not just Bitcoin, it's all the cryptos. So Thursday and Friday. So first off, that's important. I mean, the whole Bitcoin thing is actually very important. We're going to follow it over time. We're going to read a lot. We're going to find out what people think about it. So Thursday and Friday, we saw hundreds of stocks that are down 5% or more. So last week, we talked about the guys I follow, the pumpers and the dumpers, the guys who were hawking stocks, the Vin Diesels, right, the boiler room guys. They're out there pumping those stocks. Well, they've moved over to the OTC market. These are unlisted stocks. So I've been looking to see, is there something that we should know about unlisted stocks? And so here's what I found out. I found out that on Friday, you're going to love this chart, right? On Friday, 740 stocks went down 5% or more that had at least 200,000 shares traded. That's not a lot of shares, 200,000 shares. And this is small cap all the way to large cap. This could be stocks that are trading for $1, maybe under $1, right, all the way up. And but only 45 of those stocks were in one of the exchanges that we look at with the Chicago Quantum Net Score. So we focus on the New York Stock Exchange, the New York Stock Exchange American, the NASDAQ Global Market Select. And so I'm very concerned that if you are holding stocks that are either unlisted or are listed in some of the much smaller exchanges, you run risks of having them fluctuate 5% or more in a day. And so it matters where you trade. I'm sure those tweets are not making me very popular right now. And but just think about it, right? Especially if you're a regular person, individual investor, you're not accredited, you're not a big money investment manager. Stay in the New York Stock Exchange, stay in the big NASDAQ. So this is Pompliano. I follow him. He's a big Twitter guy. And breaking, Bitcoin just reached $1 trillion market cap for the first time in history. This one tweet alone, 10,000 likes, 1,752 retweets. This is a big topic. So we are going to learn more. All right, now about the firm. I am so happy to tell you that we kicked off our latest client project, paid client project. We're a consulting firm. It's nice to get paid. And what are we working on? Media and entertainment industry. Totally different, right? We're going to be at the intersection of virtual reality, music, and quantum annealing. So I'm going to make up a slightly different story just to explain the type of thing we're going to be doing. Let's say you're driving in your virtual reality Tesla, and you're lamenting the fact that the stock's under 800, and you round a turn, and you're going to have to see like a new town, city, village, something, some view. Well, the game probably would like to know what view they should give you. What's the best view? And So we're going to come up with a bunch of metadata about the character in virtual reality. We're going to pop it up against an optimizer, a quantum optimizer, as well as classical, you know, good old stuff. And then we're going to pop back and say, this is the best visual town, city to give to that driver. And we might even pick the music that they're going to get to listen to, all with a quantum computer. This is pretty cool stuff. I got to tell you, I feel so great doing this type of work. And it's in support of a government grant, so we are doing it not for profit for some really hardworking people. So talk a little more about the biz. We're starting to really get busy with Microsoft Quantum Azure. So we ran the quantum-inspired optimizer. We're able to have it look at 350, a matrix of 350 by 350. That would equate to 350 stocks. We can't run 400. We've reached a limit. So we're learning. We're getting there. Now, you know, we run 3,500 stocks all day long on our 2012 Macintosh. But we'll get there with Microsoft. We'll see. We do have participation in the QHAC, the QHAC 2021. We've received access to Cold Quanta's system. I remember Cold Quanta when they were running those big research tables and the lasers that they were shooting stuff, and it was great, right? Well, now they have a system. It's actually pretty cool. Some of the guys from D-Wave actually went over to Cold Quanta. The system we have access to is codename Albert. So thank you for giving us access to Albert. We're going to evaluate Bose-Einstein condensates. So that's interesting. That's a little outside of my personal domain. I'm a money guy, but I think it's great. We actually have a prior relationship with Cold Quanta. We are officially recognized as a founding member of the Quantum Economic Development Consortium. This is amazing news. So we've been participating. We were invited to participate. We did our application. We went through a heavy vetting process by the government. We are vetted. We are trusted. We're a founding member, QEDC. Oh, but now I got to pay the invoice. Uh-oh. Actually, we do have to pay the invoice. It's a lot of money. You got to join the thing. You got to pay the invoice. So it's a bummer. But that's all right. That's why we're getting paid from clients, so we can pay the invoice. All right. We're doing some other real quantum type stuff. Runge Kutta. We've got a proprietary version of Runge Kutta code, and we're running it from different functions, and we're looking at the pretty pictures it makes. We're really not sure yet what we're going to do with it, but pretty cool. Same thing, quantum walks on graphs. We can now quantum walk around a buckyball. So let's ask, what's a buckyball? It's 60 carbon atoms that are connected so they look like a soccer ball. And so what happens is you can walk around a soccer ball. Now, truthfully, you can walk around a soccer ball. Classically, it's no big deal. But what makes this a big deal is you're walking around it in a quantum way. And that has some other properties. We haven't figured out yet how we're going to make money at this, but good to know we can do it. All right, U.S. government system for award management. For all you grant managers out there and PIs, we've applied to renew our registration for the year for SAM for 2021. I'm actually going to show you what that looks like. I don't know that everyone knows that. So when you apply to do work for the government of the United States, federal, and the Defense Department, this could be research grants, anything, you have to go through a process. So it's free. It's free. Don't ever pay anyone or have anyone tell you have to pay. It's just a lot of paperwork and a lot of reading and a lot of testifying to things. And so we have a DUNS number. We have a gauge number. We are ready to work for the federal government. We've submitted our registration status, and we're waiting to hear back. We've actually heard some good news already. So we are who we say we are, which is nice. So now let's talk about the business. So we did some things. We simplified our pricing. It's actually very important, right? Now it's very easy. You want to buy a stock portfolio review? It's $150 if you give us the tickers. And it's $750 if you don't give us the tickers. And you say, Jeff, guys, just look at entire stock exchanges. Don't make me give you the tickers. Now I got a whole page of tickers. You can go copy paste. It's great. But most people don't want to do that. They say, look, give me everything in NASDAQ, everything in New York Stock Exchange. Give me everything in the New York Stock Exchange American. Or pick 2 out of 3, 3 out of 4. I don't care. And give me the best stocks to buy. You know, an efficient portfolio. So 150, 750. I'm going to show you what that looks like. You go to the website. You click Buy Analysis. Just made it real simple. Don't give a lot of extra. It's 150, you hit shop, you're in. 750, hit shop, you're in. You could spend $7,500 for a week. We will code for you your own quantum algorithm so you can pick stocks in a very different way than anyone else in the world. And you can pick them in an amazing amount of power. Or, let's say you ran a job or you just want to talk about it, $100. I'll spend 30 minutes. I'll probably spend a lot more than 30 minutes. And I'll make sure you understand how we came up with the stocks, what the model says, how the model works, all those details. We are happy to do that for our clients. It's actually a lot of fun for us, so we want to talk about it. All right. So we are learning a tremendous amount by focusing on one stock. So our model in November picked SMLP with a bunch of other stocks. And we bought it, we sold it, we swing traded, we made money. It was great. I probably made $2 a share, $5 a share. It was, oh my God, it felt so good. But then we really looked at it, and fundamentally, it's a very, very good stock. It's a value play. Now that appeals to me, like in a Benjamin Graham kind of a way, a Warren Buffett kind of a way. So let's talk about it. So we did a very detailed analysis, and I have a new friend, calls me up, great guy. He asks me hard questions. I do a lot of homework. I hope he calls again, right? This guy's brilliant. And the point is, I spend time, and I want to make sure that I have something to say that's interesting. And so earlier in the week, I put out some data on Twitter, which was funny. I love the tweet, by the way. It's Chicago Quantum. We predicted the debt, the market value of debt, not the book value, annual interest cost, and the total equity valuation, along with institutional holdings. And we published them, right? They don't match the industry press. If you go look at Yahoo Finance or FinViz right now, and by the way, I love those services. Here's FinViz. They say they got 3.5 million shares. That number's wrong. So everything on this chart is wrong. It's wrong. I know it's wrong. Now you know it's wrong if you read my tweets. Not everyone's reading the tweets, by the way. I got like 3 likes on it. By the way, the number is 6.1 million. It's not 3.5 million, and the reason is they issued another 2.3x million shares as a default for the debt. And now those shares are being sold into the market. So the company did an early preview of their earnings just after we did the Twitter release. I was actually amazed because we were going to be waiting, right? So they did the release on February 16, which validated our work. We were within $10 million of the market value of the debt. And that gave us a lot of confidence. They also gave us confidence in their future direction. They will pay down debt. They will continue to grow their earnings capability. The EE pipeline with its non-recourse financing will be active by the end of Q4. That will be accretive to the business. I mean, there's this really positive story here, right? Interestingly enough, for the week, the stock didn't really move. If I show you the FinViz again, I'll zoom in a little. I want you to see what I see. It's flat. Like 2 weeks, the thing's flat. So what happened? And I got to tell you, this is the difference between emotional investing and what I'll call real investing. So what happened was we went back to the videotape and we said, all right, how's the debt doing? If they're going to be paying off debt, maybe the debt went up. I mean, the stock goes up later, right? So we took a look at the debt. CCC plus 97.844 is the price on our 2022 debt. Now this debt, people were probably worried they weren't even going to be able to pay it. Now, it's almost par, yielding 7.1%. Come on, that's a good price. That's actually a very good price. You look at the debt for 2025, right? It's at 84 cents out of $1. 10.6% yield, rather attractive. And you look at the preferreds. Now, they're not paying on the preferreds, but it's part of the $81 million a year if they're going to pay the preferreds. That traded up to $42, almost $43. That was 39 and change when I last looked. So in a couple of days, I realized that the bond prices, assuming that they hadn't paid any debt off in the last 2 days, bond prices went up. Yields dropped, and the market valuation of their debt went up. So, lo and behold, the market value of the debt went up $20 million. Now, I got to tell you, by the end of the day, after I published this, it went up again. But as of that moment, it was $20 million, 2 days. The market value of the stock went up $2 million. So, this is it's a 10-to-1 ratio. In this case, 10-to-1 ratio, debt to equity. So, they did a good job. They said that they were going to use the money to pay off the debt. And in fact, they are going to pay off the debt. And you see the bonds are strengthening. So it gave me a lot of comfort that I understand now what's happening in the market. Oh my gosh, I had all these emotional things that I was thinking. Oh, maybe it's the Martian lander or something. I don't know. But what I really realized was, no, it makes perfect sense. You're going to make cash and you're going to pay off debt, then the value of the debt should go up. If there's $1 to invest, even I thought about buying preferreds. So, very important. We do see low volume in the common stock with higher spread. At one point I looked, it's a 97-cent spread on the stock price. And a lot more action in the preferreds. I mean, it's just interesting. Oh, we also analyzed institutional holdings. More and more holdings are coming in for 12/31, and we're up to 2.5 million shares, or 41% of the 6.1 million shares that we know about. So 41% institutional holdings. Probably pretty close to what FinViz says. They're saying 52%, but again, they're dealing with the wrong number here, so that's okay. So what's important here, I just want to give you a sense. So it's not easy to do all this work. Edgar Online. We use Edgar Online to find the data. So this is a 13G. There's a company called CIFC. There's CIFC direct holders, CIFC lenders of record. These are people that own debt in the company. And lo and behold, there's your 2.306972 shares that were added in November as part of the default. And they currently hold 295,080 common units. So, point is, if you dig deep enough, you can find all this stuff out. You know, you want to look at all the different filings. Now, these are the filings when you go into Edgar, run by the Securities and Exchange Commission, by the way. And you can see people whose filings or 13Gs are tied to Summit Midstream. In other cases, you have to search on Summit Midstream and the name of the institutional holder to find it, because it's not hosted under Summit's name, it's hosted under the other ticker. And so these are not easy to find. But you do your job, you dig deep enough, you're going to be able to find every share of stock. And I love FINRA, by the way. I just want to tell you, FINRA is the place where you should be looking for all your bonds. Probably you shouldn't buy a stock without understanding how many bonds, how much they got in bonds. So, Quantum Economic Development Consortium, just want to show you, since we are proud. So you go to the QEDC. Let's take a look. Membership. Members. Bingo, there we are. Right underneath Toshiba America and right above Verizon Wireless. Maybe someday we'll be as big as a Verizon Wireless. But that's probably not today. And but we are proud to be part of this auspicious group. We work very hard, and we will continue to drive it. In fact, they have us listed twice, which is very nice. Thank you. All right, what else we got here? The thing with the stocks is very important because you may just think, oh, they always go up. I'm going to buy. I don't care. But you should really look. It's really important to take a look, understand the debt, understand the cash flows, what they got to pay in interest, capital, and keep going. So I'm going to talk a little bit more about just some other things in the stock market that are important. Crude oil. Crude oil for the week, down. And in part because oil went up because of the freeze, and then it dropped to even below where it was Monday. So we're below $60 for crude oil for March delivery. Gold for the week. We're down on the week for gold. So this is not unusual. Think of it this way. If I can make more money putting my money in the bank, earning interest, giving it to the feds and earning interest, gold is that much more expensive to hold. As is silver, as is Bitcoin. They don't pay interest, right? And so you would expect gold to come down when inflation concerns come up. And that's really what you're seeing here. This year, you see inflation concerns, you see gold dropping. The euro, right back where it's been, about $1.21. You know, we saw $1.20.9 earlier this week, $1.21. Just remember that number. The FTSE, the UK stocks. Let's take a look for the week. And down for the week. So not a great week for the stock markets. The Nikkei, by the way, I love the Nikkei. This is what I use at night to figure out how we're going to open. Nikkei started strong. Look at that. Tuesday, boom, and then Wednesday, I remember I tweeted that the futures are coming down. So the Nikkei's dropping, fell through the rest of the week. It's tough, right? Japanese stocks are down, the large U.S. stocks are down. Mixed. Everything's mixed. Now, this is interesting. Crude slides with Texas oil wells seen restarting output. So I guess oil wells, pipelines, windmills in Texas, they're not used to the cold weather. And but they'll come back online. It'll be fine. A lot here for Twitter. So we continue to work on our code base. We continue to invest in our proprietary platform. One of the things we continue to struggle with, though, we use free historical stock data. Thank you, by the way, Yahoo Finance. But the problem is that lately they've been doing a lot of updates during the time when we are running jobs. And so what happens is we do data validation, we find good stocks. Next thing you know, 2 stocks have changed before we run again. And then we got to start the whole thing over again. And so eventually we'll pay for market data services, or we'll work with a large investment house that has them. But for now, we're still working on free services so that we could charge you $150 and not $1,000 when we want to run a job. So we've been publishing some things about kurtosis and positive skewness. So kurtosis is the fat tail. If you look at a bell-shaped curve, distribution, probability distribution, kurtosis is how much weight is in the tails, or greater than 3 standard deviations from the mean. So this is the 100-year flood. So when you look at a stock, if you say that on a given day it goes up 0 or 0.01, a 3 standard deviation movement says it can move a lot. It can move dramatically. And skewness is a bit like a momentum thing. It's whether the distribution curves up. So think Poisson distribution, positive. Positive skew means it's surprising to the upside. Now, it doesn't mean it's going up more, but just more up than down, more often up or down, more excitement up versus down, so you feel good. So what does that look like? So we just showed DP and UTZ. These are two food companies. I want to show you what that looks like. Ooh, where is it? Where is it? Where is it? I hope I didn't close it. Hang on a second. I'll find it. There it is. Blow this bad boy up. So, you're not going to be able to see that. So, positive skew means lately you've had ups. Ups more than downs. So you see how we've had some good ups here, good ups here. So this is Domino's Pizza with UTZ underneath it. Boom, boom, upward movements, right? So the funny part is positive skewness and positive kurtosis, or what they call leptokurtic distributions, are supposed to be good. You're buying a stock, you want to see that. But these stock pictures look very different. One is pretty flat. I mean, yeah, you got some gaps. Most of the gaps are to the downside. So your kurtosis is the fact that the stock drops like a rock, right? The stock goes up like a rocket. So, I don't know. And then you look at positive skewness, and I'm not really seeing a whole lot of... I mean, one of them is obviously going up, 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 up. The other one's flat. And so with some upward movements and downward movements. So this was the problem that we had, was if you look at positive or leptokurtic distributions and you look at positive skewness, my instinct and some of the academic papers we read said that these are good things. I'm not sure. I'm not sure. Neither is the team. So, had a quick conversation this week about SMLP. You know, that's our favorite stock, with Kinder Morgan. Kinder Morgan is dominant player in the pipeline space, the midstream space, United States. So, if you look, what's red is Kinder Morgan, and they dropped like a rock, just like SMLP. Amazing, the shape, and then they recovered more like a hump of a camel. SMLP, more like a jagged spike. And now they're within 10% of each other in terms of where they started the year. So from a pipeline perspective, SMLP, Kinder Morgan, similar, sure. You can see some, but these guys have some nice counteracting trends. And so you might actually want to hold these guys together if you're looking to make a play in the pipeline space. My guess is Kinder Morgan has a lot less jerkiness in the moves. You still get your upside. Then you look at SMLP with that dramatic rise from November, early November. Virtual reality, NEOS. Pretty cool. I don't know if you guys ever tried that, but you may want to take a look. NEOS, virtual reality. And then we did get an award. We are zero complaints for the year for Better Business Bureau. So I want to thank our customers for not complaining or coming to us if they have an issue. And we honor the principles of the Better Business Bureau. We believe that we should be trustworthy and that we should do the right thing even when no one is looking. And that's it. So, no commercial this week. Just be safe out there. And, one thing I'll say. So, 99.7% of you that watched the video this week, it was a lot of you. It was 5,000, almost 400 of you. But almost all of you, I had to pay for advertising to show you the video. So please, if you like the video, when you're done watching it, hit the subscribe button. We do this once a week. I'd like you to know that we're doing it. I'd like you to just click on it without me having to pay for advertising to let people know. We're relatively new in the game, and it helps. So please hit the subscribe button, and so you can hear about upcoming broadcasts. Thank you very much. Y'all take care now. Bye-bye.